I can tell you, I know exactly where the market is heading. Just kidding. Okay, so now our final article is from the New York Times. I know the decline has been unnerving, but readers want to know how nasty this year's downturn may become. All right, New York Times tries to answer this by Jeff Sommer. The stock market's decline this year has already been painful. The key question for many people are how excruciating it will ultimately become and how they can endure it. The numbers aren't pretty. The S&P 500 is down 13.3% from its January 3 peak, and last Friday it briefly fell below the 20% threshold that defines a bear market on Wall Street. We should do a video on what a bear market is and the different types of markets that exist. But stocks rose 6.6% this week. The first weekly gain in 2 months is certainly conceivable, though I think unlikely that the worst of the damage is over and that the downturn of 2022 was just a flirtation with a bear market, a short affair that was never consummated. That has happened before and fairly recently at that. Do you even remember the market people during Christmas week in 2018? It had been falling for months as trade tensions between the United States and China mounted. The December 24, the S&P 500 closed 19.8% down from its peak, leaving it just a smidgen above the 20% bear market line. On the day after Christmas, it dropped briefly into bear market territory only to rally smartly by the end of the day, said Howard Silverbert, senior index analyst for S&P Dow Jones Indices. The market went on to gain more than 44% until its next big stumble early in the COVID-19 pandemic in February 2020. Will this year's market turn out to be another shy bear, one that has barely shown its face only to disappear for months, or will it return as a ferocious beast that will punish investors who do not protect themselves from harm? Alas, I don't know the answer to that one, though I find it hard to accept the idea that this year's cascading stock market declines are over. There seems to be many negatives weighing on the markets, among them the Federal Reserve decision to tighten interest rates in response to soaring inflation, the continuing ravages of coronavirus, the high price of oil and gasoline, and the war in Ukraine. Still predicting where the marketing will head is a fool's errand. And that's true. Like with markets, man, you can't really sit down and predict what's going to happen. You have to really think about the flow of things, because the market basically follows the people, with demand and supply and stuff like that. What's been happening is, yes, we're in inflation. Yes, the price of living is going up. The war in Ukraine didn't help. The increase in gas prices does not help at all, because an increase in fuel and an increase in oil in general, it affects production. And then you're looking at a lot of challenges that we've been facing, especially in the past 2 years with coronavirus, how that hampered production. If you look at a product such as a PlayStation, it's still hard to find a game that came out 2 years ago, or is it a year ago? But it seems like a long time now because of chip shortages. So when you start to look at manufacturing, and a lot of things are being affected, and then when the cost of gas goes up, it affects the cost of production. And then with inflation added on top of it, we are just in a weird space in terms of global markets right now. So a lot of things will be going down. A lot of people do not have that money to spend. It's a struggle to make money because opportunities are very few right now, because everybody is either trying to mitigate the effect of the increase in costs and inflation, so spending gets cut. And then we end up in these situations that we are in, where a lot of, the valuation of companies is going down because there's just not enough money to spend. And then the bubble that we lived in for the past 2 years because of the stimulus checks and the whatever checks that were coming out, and people had money, people were not spending money, people were not traveling, people were not doing a lot of things. A lot of people became investors in that period of time as well. So now we're just in a weird phase, which I hope we'll get out of, but I don't know. The best we can do is make educated guesses based on history and prevailing conditions. As an investor, I hope the market rises immediately, but I'm preparing for further declines, buying stocks and bonds regardless. I've been doing this for decades. Tons of academic research suggests that it's fruitless to try to outsmart the market. So I use diversified low-cost index funds that track the entire stock and bond universe in the expectation of long-term gains. This approach makes sense for people with long horizons, but the earlier you need the money, the more difficult your choices will be. Plenty of people have written to say they're grappling with these issues. Keep the questions coming. I'll answer as best as I can. They include, so watch and wait or jump right in. Because the stock market often falls, I wouldn't invest a cent in it if I needed to spend it soon. Pay the bills first. I've suggested several alternatives for stationing your cash. They include US government bonds, which now yield 9.62%, a rate that is reset every 6 months. Other short-term treasury bonds and high-quality corporate bonds are reasonable choices. Listen, I am not a financial advisor, so do not take this as my advice. I'm reading this article off of New York Times. If you go ahead and buy some bonds that you have no idea how bonds make money and you lose money, do not come back to me. The only thing that I can say when it comes to the stock market is you have to be very careful and you have to do a lot of research and understand what type of investor you want to be. If you want to be a retail investor, if you want to be a speculative investor, that's on you. Okay, go ahead, spend your money, time the market, make some money. Listen, good for you if you do make money. If you do end up losing money, the number one rule of money is never lose money on the stock market, and rule number two is never forget rule number one. So do your research, read, and understand what's going on. Listen to a lot of podcasts like this. Do your research. Watch, markets, how things happen in the end. Because a lot of times what happens, a lot of us don't want to do the research. A lot of us don't want to read. We just want to be told, do this and everything will work out. But the thing is, when it comes to investing, when it comes to money, there's a lot of risk that is involved. The risk might be minimum. Even if they say it is a 1% risk, that risk there is a 1% chance that you might lose it all. So that's where we find ourselves in right now. If you're a long-term investor, I would say it's a good time to purchase a lot of stocks as things are going down. If you do have the cash, go ahead and do it. Don't keep your money in the bank account. Inflation is going up. Things are happening that are weird and your money keeps on losing value. So you might want to start investing in some low index funds that are available. The S&P 500 for me is something that I believe in. I feel like business will keep booming. Things will start go back to normal and things will go back to where they were pre-COVID, pre the war, pre everything. I do believe in that. However, I'll be very skeptical in terms of how long it's going to take us to get there because there's a lot of issues that are happening at the same time. We're in a bear market. You're looking at, increase in cost of borrowing. You're looking at increase in prices because of the gas prices as well. So there's a lot of issues that are happening right now. We're also heading into this recession that we've been told for the past 4 or 5 years because the market just works in a cyclical cycles in a cyclical formation. So at some point we're up, some point we're down. At this point, we are almost at that point where we hit the recession and we have to be prepared for everything. The best thing that I know is if you either want to have cash or you want to invest it, but you really want to have cash because a lot of things are going to go down. People are going to become desperate. People are going to start needing money. And that's when opportunities present themselves. And those with the cash have the opportunity to do something. With that said, I hope you guys enjoyed this week's podcast with your favorite Uncle Kevin. We were talking finance, we talked business. We looked into everything, man. We looked into Luna crypto. We looked into the Americans buying Chelsea. We looked into Apple trying to bully its employees into not being part of a union. And we finally looked at the stock market. Let me know in the comment section what you thought of the podcast, issues that you had with the podcast, advice that you give us on what to do when it comes to our finances. I really enjoy doing this with you guys, having you guys listen. And yeah, with that said, leave us a subscribe, leave us a comment. I'll see you next week with another conversation, talking finance with Uncle Kevin. See ya.